Hey, what's going on, guys? This is TerrenceRe, and I'm back at you with another stock market update. Right now, we got the VIX up. The VIX is up about 6%. Uh, we got the S&P futures relatively flat. The market opened down a little bit, uh, almost a percent on S&P futures, and well, I say three quarters of a percent. And it looked like it's battling back, closing the gap where it gapped down. That the Nasdaq futures are down about almost half a percent, and the Dow futures are flat, and the Russell futures are barely down a quarter of a percent. Now we got bonds up today. Bonds have been taking a beating. Both forward slash ZB and the forward slash ZN are both up. I'm over here looking at reading the futures. I always when the market opens, I'm always looking at the futures tab to, to see what the overnight action look like. Now, gold, we have a big pop in gold. So let's look at gold. Gold actually gapped up. Now, this is unless you've been, you've been in the house all weekend. Even if you have been in the house all weekend with social media, I'm sure you've seen what's going on right now, um, and with Israel, right? And the Palestinians. So that is probably why we have this gap up in gold. Now it's very rare that we see gaps in the futures market because it runs overnight. So probably when the futures market opened up Sunday afternoon or Sunday evening, that's when this occurred. And now we got this big hole right here. What I want to do, I may just put something on, right? Let's see. So we got an IV rank, um, 36 and above. Let's get right to it. I'm gonna go ahead. I may put something on. Let's look at the intraday. Let me look at the 4 hour. Sometimes you study long, you study wrong. It's been beat down though. I had no idea. Let me look at it on a yearly. Oh, we around some support right here. Now the thing about trading in gold is making a decision whether you want to do it in the futures market or do you want to come in GLD and then make that trade in the ETF? Like which one, you got to look at, try to see which one is going to give you, the more bang for your buck for the most part. So we are right here at some support. Let me clear this out. So this was not what I had planned on talking about today at all. I really just came on and I was just going to talk about Tesla because I was waiting on the setup in Tesla and trying to figure out what to do in there. Let's look and see what a trade would look like in GLD. I would probably be at 39 days. See, I missed the pop. So you got to really, I like to sell while it's down. Sell, it's like if I'm gonna get bullish, I want to sell the put spread while it's already down. Now we got an up day, and I kind of don't want to chase it. And I already see right now I wouldn't trade it in here. You're just not getting anything for it. You're not for if I wanted to sell a put spread, if I do a $5 wide, I got to get so close to the money. And when I say the money, so right here is the where you see this little dot at. This is where the market is trading, and I'd have to sell this 39 delta. So right away, I already see if I do anything, it got to be over here. We're gonna go to the futures, and we would do it in here, right? Now let's see if I'm gonna do something here. More than likely, we want to come. Let's go. Let's see what we got. So these ones right here. This is the um, current contract. I would go anything. Let's see. 49. It's either 49 days or 25 days. You don't got a whole lot to. I'm not gonna go that short of a term. So 49 days. I don't want to go that far out too. Let's see what the it's 25. Now I'm looking over here. Now you watching me make a decision on whether to put a trade on. And it's not so much um I've already established that I want to be bullish this particular trade if I put it on, right? Now at this point, I'm looking at option liquidity. So I'm over here looking at open interest. You see how there are no contracts over here. Volume, we got like 13. Somebody put 30, it's got 13 over here. So we got someone about 13 puts or sold 13 puts. I don't know what it is. This on the put side, and then we got 13 over here on the call side. So with 13 and 13, this is more on both sides. I don't know. They could be doing something like they could be doing a straddle or something. Buying they may be buying a straddle, something like that. Um, some type of combo trade. I don't like that. I would have to come. Let's look at 49 days. Now you see over here. Now we got thousands of contracts, right? So that right there, that's gonna give me and the bid ask spreads are tighter and you can see the trading going on. So you want to be in the liquid market and you want to be where everyone else is trading. You're going to get better feels. So I've established that I would be 49 days out. Excuse me. So I don't know, 1830. We're going to call that the. So if I was going to sell the put and I sold the 33 Delta, bought the 1825, I'm collecting about a third of the width. So the width is $5, and I'd be collecting on 160. This ain't gonna move, and it'd take forever to move. So I don't really. I like the. I am bullish. Like I do think that with this war, that's gonna that's possibly could catapult gold to go up. This may be something more of a play where I just trade it outright in the micros. So I'm gonna watch this. With it gapping up like that, let me see if I can get a pullback, instead of getting right into it. It's already up. And it looked like, to be honest with you guys, it looked like if it breaks this high right here, see it right here on this 200 riding this SMA. If we get a break over here, maybe it'll go to 1875 where we see some more consolidation right in this area. So I'll be watching. I'll be watching. I would like to get a pullback. So I'll be watching gold, and then if I do place a trade in gold, I'll put it in the community. Like I put what I did, so you guys can know. More than likely, I'm a seller put spread. Buying. This is I could see it getting up here before it faced some resistance right around what is that 1915. So either I'll do that, or let's look at the let's take a look and see what the if you buy a call spread. Now, if you buy a call spread, you're only paying 220 if you get filled there. It's not bad. It's not bad at all. So maybe and you really need it to move to make some money. But if it can get up there now if we look at the expected move, right? Let's take the expected move out. You see where it's priced at? Got a $65 expected move, and that puts it up around what 1930, down around 1800. What did I say? Resistance. I said right around 1950, 1920. It's saying maybe 1930. So up into this area, or let's go out a year. See if it well 1800 would be right here. Where this gap is. Hmm. So I like to look at the expected move. That's going to show you. So anything within that range is normal. So you got to be able to handle either move, especially if you're trading this outright. If you're trading it with a spread, your loss would be capped, is limited. If you're trading it naked, let's say you sell a naked put, you come in here and you just sell the put here, you better be able to you understand that it could still go down here, and that would be normal. So if I was gonna sell a put and do something naked, I would be out here past the expected move. I would sell this. And this isn't a bad trade if you can handle that type of, it's gonna margin your account, your buying power $5,746, and your max profit is 1,090. So your max profit is almost 20%. Well, I don't know what 18%, 17, 18% of what your buying power is. It's not bad. A lot of people, but you got a probability of profit at 83%. So that is one of the benefits of being able to sell naked options. All right, let's go back to Tesla because that's what I'm going to keep my eye on gold though. Tesla, Tesla is selling off a little bit. I actually, um, I like that too because I am bullish Tesla. I'm gonna show you my fib levels. Um, it touched my 100% right here. My next fib level is right around 275, right around that area. And with it already being down, I would like for it. I've been watching it intraday. So we come to the intraday chart and you can see right here, this is a 30 minute and it's riding at 200 SMA. I like to see my stochastics. Ideally, I like to see it come right down here to support. Got a support level right here of 248. And then I like to see it sit and then start to turn up. You want that. For me, I like my stochastics. If I'm gonna get bullish, I like for 'em to be oversold on my stochastic on whatever time frame I'm looking to trade on. So I can get that pop that I'm looking for. Right now it's angling down and it's going down. So we sit tight with Tesla. I am overall bullish. Tesla does have earnings coming up. We got earnings on October 18th, so you got to keep that in mind. Any trade that you put on, it's going to move during that day. So you want to have, in my opinion, some defined risk trade on if you're going to trade Tesla. And pretty much, Nvidia is a big mover today. Nvidia is down 12 bucks, almost 3% move on the day. Uh, it don't even look like it though. It's because it's a $445 stock. Like I'm expecting to see a big candle, but I don't see it. Right? Even though it's down, that's wild. And I'm zooming in too. Like that's so that like big moves or what appears to be a big move in Nvidia looks small because of how large the price, how expensive it is, the stock is. So I have no that looking at this, it's just drifting here. Like I don't have any type of anything on this. Like no setup. It don't look good at all. I don't have no direction. The IV rank is not is 13, so it's not over 30. I don't really want to, you could sell something, you could do a neutral trade, but you'd have to come out 39 days. Here, not really worried about the earnings on November 15th because you will not still be in this trade by then. If I sold this at 39 days, more than likely right around 21, I'm out. So by the time that's about 18 days bleeding out, we still won't have earnings yet. The only thing is you're not gonna get a lot of whatever IVs in it. It's not gonna come out until after earnings. So it'll be purely like almost like a time trade. And let's see if you can get paid anything. Let's see if any juice is in this. I would do something like an iron condor. It is. 'Cause you can come out here and sell the 16 delta by the 14, sell the 15 by the 13 here. So you're out pretty wide. You're out almost at you're way outside of the expected move. It's not a bad move. It's not a bad trade because you can. you can get out of this. The thing is, you can be out of this by earning before earnings. So this would be base basically this is just a time trade. I would want to get yeah, that's what I would do. I'd be somewhere like that. It's not bad to be a neutral trade. Now that iron condor, it would be a that would be neutral. So like you're non-directional. If you look down here at the deltas, you see how it says zero, it'll let you know it's a neutral trade. Now if I wanted to like let's say I want to iron condor, but I want to make it bearish though. So I can move this to sell the 24 delta by the 22 delta, right? And then move this one in, maybe move this one in here. Let's see. No, move that one out. I'm sorry. And you see how my delta went to negative? So it's shaded more. And that's all you, and then basically I'm just moving the call side down, and you can see I can move the call side down and then move the put side down, something like that. And that's shading it more bearish, but it's bearish neutral for the most part. Because you can still, let's say you were bearish and you wanted to do a call spread, you could sell, right? Sell the 480, buy the 485. But you want to sell both sides of the spread just to pick up some more premium. You can come out here and sell some cheap stuff, pick up something just to have some more credit. It's still basically a call spread in essence. It's gonna say iron condor, but you out here selling junk, right? Just to pick up some cheap premium. That's at 185 I'm collecting. So something like that. If you thought that Nvidia would break down, I wouldn't shorten the video to be honest with you. One little pop here, it breaks out of here, it could run. You can see all-time highs on it. I'd have to see Nvidia like get below this SMA, the purple one. I want to see it on this side. And then if I look at my stochastics, it did just reached overbought on stochastic. But I still think like it can spend time up there. If you go back here, you can see it was overbought, just kept rising though. So you can't just go by that all the time. So hey guys, just me, I'd be today. I haven't placed any trades because you got the war that's going on. That pretty much is going to keep the market sideways and in limbo until I think we got some news coming out later on this week. So I will just be keep an eye on gold though. There definitely will be a trade in gold, not only gold but oil. Oil pop. Now I was watching oil yesterday. Now oil got a big down move, right? What I want to see in oil, to be honest with you, is let's look. I'd like to see it come down and make a lower low. Now you may not want to wait on that though. It's a up day, and you say, "Man, it's up." Yeah, but you got this hole here. So is it gonna be up and is it gonna run? Now you can also trade the XLE because oil with XLE is the energy sector, the ETF for that. So you can come over here and trade the XLE. You see how it looks similar, and you can get a trade on it here, and it'll be cheaper to trade than trading those oil futures. But what you gonna do? It could because of the it's so unstable right now, and with that war and everything that's going on. I was just watching some news before I came on, and now they're trying to say figure out if Iran was involved, or speculation around that, and they're saying that anything going on in that region could affect oil production. So anything that affects oil production depends on how it affects it. You can see XLE shoot up, but ideally, whatever we see in oil, we should see it in XLE. So that's just another way of trading. If you want to trade oil without trading the oil futures, you can come to XLE and take a look at that. All right, guys, be careful today. Watch out. Understand your risk before you put it on. And like me, I always know when I'm gonna get in, like where I get in. When I get into a trade, I know what to make me get out, and I know what to make me take profit. Where I take a loss and where I take profit. So understanding that make trading a whole lot easier for you. With that, guys, I'm gonna be out. Peace.